Well, my friends, here we are. Here it is. This pullback that we've been looking for, honestly, for the last 3 or 4 days now. If you guys do remember on the channel, I did a live stream where I said bear signal inbound. And what I was talking about was a lot of the bearish divergence in which we were seeing on the charts that was a good foreshadowing that we were going to be seeing a pullback soon. Well, that's exactly what's happening. So in today's video, let's go take a look at the XRP charts. Let's get an idea of where we may see this thing stop at, and then what some of our breakout targets to the upside are if we do see this thing continue to work its way up. With that being said, of course, if you do enjoy today's video, you can let me know by smashing that like button and subscribing to the channel if you are new. And with that being said, let's go ahead and let's get straight into the video. So if you guys do remember, we've been talking about this bearish divergence in which we were seeing up here. Now, as you could see on the video that we were doing it, we actually talked about this way before this pullback even happened, but it was pretty easy to predict because things were just getting super overextended off of our EMAs, off of many of our different levels, right? I mean, especially if you look at other cryptos such as ADA, for example, let's go ahead and pull that up. You can see this massive divergence here, right? Setting those new lower highs, setting these new higher highs. And so with that divergence there typically will lead to a bit of a pullback, which is what we're seeing now. Which is okay. It's totally normal. Now, there's going to be the people, there's going to be the FUD, there's going to be the people who are like, oh, that's it. This is over. This isn't over until there's a lot of confirmation saying it's over. Okay. And I'm going to start to point out what some of those confirmations are and what we would need to see for me to say, okay, this was a dead cat bounce. Let's prepare for this thing to start going back down. Okay. So what we can see here is we have 3 very important levels approaching at the moment for the midterm, I would say. Three very important levels. Okay. So the first one is going to be this previous high in which we set. Typically speaking, of course, as we do work our way up, we're going to set a wave 1 high. That's going to be the high that we set back on August 11th. We're going to come down, of course, retest, work our way back up, boom, explosion to the 3. Then we're going to come back down. Now, typically speaking, you want to see where this low goes. Where does wave 4 go? I personally say that I love to see that this previous resistance, this wave 1 resistance that we set, I love to flip that and use it as support. I'd love to be able to hold that and then continue upwards because that's a very strong uptrend. But realistically, there's a few places in which this can go that are going to be okay as long as we do hold them. Okay, now let's talk about where they're going to be. So, of course, our first level that we're going to want to find some support at, which we're losing at the moment. But if we do go ahead and zoom in, you guys can see we're kind of losing it at the moment. But, of course, if we could recapture it, it would be phenomenal. It's going to be where that previous high is again at about $1.09. Let's go back right up there. Okay, $1.09. Now, the next one is going to be our next high to our next low. So we had this swing high to this swing low. So, of course, this low down here is going to be important. Then from there, the next swing high was here to the swing low was here. Okay, so this low that we set here is going to be our next target because there was support here. This is where we want to find some support before ultimately having to come down and find support down here. So this support level is going to be right at about $1. No surprise there. $1 is a very strong number. $1 is something that a lot of people look forward to for many cryptos. And if we're falling, a lot of people like to see that the price does not fall below that. Now, next but not least, of course, if we were to lose $1, we're going to start to very quickly interact with a few important levels that are going to then dictate whether or not we are going to actually be seeing this be just a bull trap or a dead cat bounce or something of that nature, and then a continuation back into a bear market, bear cycle, downtrend, etc. Now, this last level that I'm looking forward to is going to be right here. I personally want to see that we don't fall down and close around or under 91 cents. Now, the reason that I say that is because the textbook just key example / definition of what an uptrend is you're setting higher highs, you're coming back down. So boom, you set a higher high and you're setting higher lows. We don't want to be setting a whole bunch of these where we're going down and we're establishing support at the same exact level because, of course, then we have to worry about this, right? We have to worry about the head and shoulders, which is not something we like to see. But realistically, we want to be setting higher highs and higher lows. Higher highs, higher lows. Because that means that our resistance, we're breaking through resistance levels and we're establishing new support levels. Breaking through resistance, establishing new support again and again. And so the whole idea here is that what we want to see, of course, is that we do go up, we boom, wave 1, wave 2, wave 3, we come back down and establish support above our previous level of support, our previous low, boom, and then work our way back up. So anything above 91 cents, I'm okay with. Even if we go below 91 cents, there's still levels down there, but in the midterm, this would be more optimal. So this is what I'm looking out for, okay? So pay close attention to these levels as they're going to get very important. Now, I also want to note, that one good thing about this, and one reason in which we may very, very possibly see this happen, is because not only our RSI, but our EMAs, and if we also do go back out to the MACD real quick. Okay. So let's look at a few different things. So one great thing that we're seeing is the fact that our RSI is starting to get into oversold territory. We're getting very, very close. We lost this key little level of support here in which we had already previously established. And so since we did lose that, likelihood is we do dip down into oversold territory, or at least touch it. The good thing about that is we are very, very close. If we were like halfway through this channel right now, if we were like, say, right here, and we still had all of that room to fall, I would start to get a little bit more concerned. But the fact that we are just about to touch it pretty soon within the next couple hours here, that's definitely a great sign, as well as the fact that our MACD does look like it's reaching its bottom point as well, which is typically when we'll start to see it break. It'll start to trough out a bit before we start to see upward momentum continuation there. So there definitely looks like there could be some great pressure, and it does look like technically on a 4-hour chart that these oscillators and indicators are saying that the fall is likely going to slow down at some point, which allows us to establish support and then retry going back upwards. Okay, so these are my levels. These are what I'm looking for. And then if we do start to find support, I'll give you guys like supreme breakout targets. But just for the short term, just for the a quick short example of the breakout targets in which I do have, all we got to do, of course, is let's go back out. All we got to do, let's get our Fibonacci here. We're going to take our swing high. Say if we establish support on the dollar, we're going to take our swing high, boom, and we're going to draw our Fibonacci all the way down to $1. If we're able to clear our 618 to our 786, which is $1.27, my current breakout target is going to be $1.68 at about $1.55, which is a gain of 55% from that support established. So definitely do look to see some support get established here. Now, a good reason and another reason as to why we definitely may establish some support here that will allow us to see $1.55, $1.60 plus is going to be the fact that within this range, we are also going to start to see our daily 20 EMA, which is very usually where we find support in uptrends, right? So if we do go back out here, one thing we can see is that on our way up, anytime we would get very, very extended, anytime we would start to really come up off of it and extend and create a big gap, what we would do is we would slow back down and then we would bounce back and come here. Now, of course, this was the slowdown there. That's whenever we saw, boom, a retracement and continuation downwards. But even if you do look into the build up to that, right, we can see that every time here we're getting extended, pull back down to the 20 or the 50 or the 50 EMA, 20 or the 50, one of those two. Come back down 20, come back down 20, boom, rocket fuel. But even when we rocket fuel, eventually we're coming back down to that 20. Okay. Now do pay close attention though, because even if we do come back down to the 20, it does not mean that we are going to stop at the 20. It's just going to kind of be a little pit stop for us to test to see it, right? So it could definitely look like something like this. We come here, we test the 20, we start working our way back up, and people are going to get excited. We didn't clear the 618 to the 786 here. We hit retracement levels. We came back down to our 20, to our 50, to our 100, never to the 200 on the daily, which is great. But we then established support on the 100, reclaimed the 50, reclaimed the 20, and started to bounce. But as long as we were holding these levels, there was never a fear. There's no worry there because we've not lost those key support levels, which at that point means that we are still not within a bear market. We're not in a bull market. We're not in a bear market. Still in a bull market. Things are still looking good. And that's where I'm at with XRP still. Okay. Until we start to lose these key levels of support, until we lose the 20, until we lose the 50, until we lose the 100, especially if we lose the 200, then I'll start to say, okay, we need to plan for the downside, likely another retest back down towards 50 cents or so. But for now, I'm looking at these levels. Above 91 cents for a close would be optimal. $1 would be even better. And of course, if we can recapture $1.09 and continue upwards, those are all great levels. And do anticipate that within that time frame that we do maybe start to operate between $1 and 91 cents, there's a good chance we interact with our 20 EMA, which as we've seen in the past has proven to be a great level of support to continue upwards. So with that being said, guys, that is going to be about it for today's episode. Just pay attention to these levels. We've been talking about this. We've been ready for this. This is totally normal. And we all kind of knew that a retracement and a cool down was coming. And so now it's just time to execute. With that being said, I will update you guys as soon as I can. Of course, tune in tonight for Gem Finders as we do just look for some new cryptos. We step away from technical analysis and we just go look at pretty cool new cryptos and startups and things like that, as it's always a great time. So I hope to see you all there, and I can't wait to see you all next time. Peace.